Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, September 4, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, in terms of the S&P, they didn't really get very far today. Looking and comparing to yesterday's candle, which was a wide-ranging candle, today the range was rather narrow in comparison. Therefore, it was more of a pause-ish type of day situation. They're still hovering around the convergence of the 50 and 20 period moving averages. However, there's a more important place that we've got our eye on, or a place for a more important reason, I should point out. The number, and we talked about this last night and last week and beyond, is 548.88. What's the significance of 548.88? It is the low of this candle here, which is from the 15th of August, where if they get below and they stay below, first intraday hourly below, 2 hour, 3 hour, half a day below, closing the day below, that will put them in no man's land where there's a lot of space between that number and the gap down below. And you don't know at that point whether they're going to stop at the gap or it's just a way station on the way somewhere else. Keep in mind, if they're down there, we do have that trend line that is the long-term multi-year trend line. My take is, I think that this 548.88 is the last line of defense. I think the door is open for a leg lower. I think they're teetering, and the bulls need to either have a quick rescue operation, and if they get below 548.88, I think it's lights out for another leg lower. We talked about an Irene number. I believe the Irene number was a little bit higher. I think it was around 552.55, give or take. I think that was the number. They closed below it yesterday. They retested above it today, closed below it again, and I think the last line of defense is 548.88. I think they're teetering. That's a technical term you learn in Technical Trading School 101. Teetering. Regardless of whether they go up from here tomorrow or the next few days, or they go down from here, either way, there's going to be enhanced volatility between now and the election. Take that to the bank. Another thing I want to point out that's rather interesting is they haven't yet even touched or tested 548.88. So let's go to an intraday chart. We'll start with a 4-hour chart. You could see clearly here, maybe not clearly in the video. Down here in a 5-minute chart, you could see clearly they haven't been to 548.88. The question is, no matter what chart you look at, why is that? They've had every opportunity today, for example, between yesterday actually and today. Here's a 2-hour chart. Yesterday and today, they hovered all day long for 2 days over that number. Why haven't they tested it? Either one of two things is going on, and we'll find out most likely tomorrow. They're going to come up short, they're not going to test it, and they're going to take off to the upside. That's option number one, pretty obvious as one of the options. Or option number two is instead of trading through it during the day, they're just going to gap below it at the open, for example, tomorrow morning or some morning, and they're just going to keep going. But that number is elusive, 548.88. I think we should pay attention to that, put it on a sticky note, watch what happens each and every day at 548.88. Market knows about that number. Everybody knows about that number. What about inside the numbers? What happened today inside the numbers? Anybody make money today? We made money in the live room, I can tell you that. We'll get to that in a moment. It was somewhat of a pounding table, real-time, hand-holding trading situation. We had some wake-up follow-through to the downside situation already early this morning, talking about the 548.88, no surprise. On a rescue attempt, the flip side situation, the bull case is they want to recapture, or the bulls have to recapture 552.55 for starters. That's an interesting number. Let's see what happens as we scroll up a little bit. Where are they now? We've got the makings of a rescue attempt toward the flat line around 552.14 or so. But keep your attention focused at 552.55. 55. That will be the pivot today. 5-minute chart, right of the vertical is today's activity. 552.55 is your pivot. You could see they opened below it. They rallied up to it, were summarily rejected on the 10 o'clock dater jolt. Those of you participating in the live room know what that's all about. And then finally worked their way above and even produced a long trade. We had traders that shorted the pivot in the live room, but we also had traders that bought the market not only on a push above the pivot, but also on a retest of the pivot where right here. How did they know that was going to happen? We talked about it about 45 minutes earlier. Here's what can happen. Watch out for this. I've read this book before. This is how you take a long trade from the pivot if they get above. Quote, unquote. Traders, help a brother out. I'm not the brother. Other traders looking for help are the brothers. Brothers and sisters. How's it going in the live room? Do you learn stuff? Is there value? Do you learn how the market works? Do you learn how to trade the market? Do you get trades handed to you on a silver platter? Do you make money in the live room? Any and all of these questions, answer them underneath this video in the comments section. Help a brother out. May not look like much, may not look bigger than a bread box here, but this was a 25-point trade, 25-handle trade. ES 25 handles, S&P 25 handles, $2.50 in the SPY, something like that, even $2 on the inside. Remember, pause the video, read the notes, go back to the chart to double check the work. 548.88 is a line in the sand. It's the entrance to no man's land. You get everything you need right out of the chute each and every day if you're an S&P trader. 552.55 is the target and overhead resistance. What does that mean? That means they should get there, and when they do get there, first time, best time, generally going to get a reaction up there. How you doing? They came up short of the pivot first time. They reacted just above the gap. They pulled back, took the luster off the pivot trade. You'll see all that in the notes. 552.55 is magnetic, a target, and the pivot. It's magnetic, the target, and the pivot. How you doing? It's good to know these things before the stuff happens. It's good to know where the pivot is before they get to the pivot. We got the decline off the pivot on the 10 o'clock dater jolt right there. Pause the video, read the notes, go back to the chart, and double check the work. If, and here's where the trade was, if it was a flush and recovery, this one here, flush down on the 10 o'clock dater jolt, and a quick recovery. If it was the flush and recovery, and they get back above 552.55 on candle closes, she's going to run toward 554.85. Didn't quite get there, but came close. Those were the two options. Either that or get below and go down and test 548.88, which didn't happen. So that was what we had our eye on. We talked through it in the live room. And then what I did was, for the traders in the live room, I mapped it out. Even before they ever got over 552.55. I said, if that happens, if they establish price above 552.55, and they spend some time up there, they come back for a retest, that's your opportunity. You can buy the retest for the bounce back off the pivot from over it, from above it. And that is precisely what happened on the nuts to the penny. The low in this candle is 552.54. On the nuts to the penny. We had a whole laundry list of traders in the live room that bought it on the retest. We had a whole laundry list of traders in the live room that bought when they broke out above the pivot. They heard me pounding the table. I've seen this before. I've read this book before. They're going to get above the pivot and they're going to run, quote unquote. Pause the video, read the notes, go back to the chart to double check the work. It's all in here each and every day. You get the schematic, you get the pre-market schematic, you get the during the trading day schematic, you get the afternoon schematic, you get everything you need. Now, one more thing before we leave the spiders. I just want to circle back to something. I think it's important. We're going to look at this also on other charts, namely the IWM next. Incidentally, is my favorite market leading indicator. So here we're looking at an hourly chart, and we have a tail candle from yesterday. So the first hour today, you could make a case. All they did was a retrace, and then they started going up, put in a reversal-ish type of candle, but they never went anywhere. And then they had a subsequent pullback pattern, ran a test of a breakup candle low, including the low from yesterday, the tail low. So can this be a bullish situation where they're testing the lows, they're running tests of a breakup candle low, they're running a test of a pivot low, and then they're consolidating, eating time off the clock, building energy, winding up the spool of thread to get going? Or are we going to wake up to a failure? Now, we don't know the answer to that. We'll have to wait until tomorrow to wake up to find out. But this is one way to look at the tape. This is what I was looking at during the afternoon today, saying, hey, look what they're doing. They're eating time off the clock, consolidating, if you will, inside of a breakup candle low, notwithstanding the tail low from yesterday. It's kind of a thing inside of a thing. Then you go over to Camp IWM and you see the same routine. Today's low was the low, and they're basically eating time off the clock inside of that low. And when you look at the daily chart, it looks much the same as the spiders. They're into the convergence of the 50 and 20 period moving average. And we're going to use today's low as a bogey. Get below today's low, close candles below today's low, intraday, and then a daily close below today's low. And it's going to be an Irene type of situation for another leg lower. 210 and then 208.5, give or take. Did we have any relative strength or weakness in terms of the IWM today? No, they were pretty much on par, down about as much in percentage terms as the S&P 500. But what about the folks down at the transportation department? What's going on over there? They're above this upper trend line of our triangle. That's item number one. Item number two, you can see the triangle better on the weekly chart. Item number two is they were up today 62 points, about 0.4%. It's nothing to write home about, but they were up nonetheless in the face of everything else that was going down. Up basically all day long were the transports. Second favorite market leading indicator, but a number one canary in the coal mine. By the end of the day, there was no material change from yesterday, but they were up today and they had relative strength up in the face of most everything else that was down. We're just going to take it at face value. Above all the moving averages, the trend, well, she's your friend. The Q people down about $1.20 today, about 0.2%, not a big deal in the big scheme of things. However, below the 100 period moving average, they are at that no man's land place. Now, this no man's land is not quite as expansive as the SPY, but this low here is coinciding with the same general area as the SPY. This low here is 455.68, and price isn't there, but it's something to watch. The other side of that is a gap, and bad things can happen if they get below the gap. Write that down, put it on a sticky note. What else do you have? You go over to the weekly chart and you have this big time weekly chart breakup candle. The low is around 448.55. We got a 448, we got a 488, and the spiders get confusing. But what I wanted to point out is you could see if you get some kind of another leg down, if you get a flush, whether it's tomorrow or Friday, and they're coming below the gap, guess what's below the gap? You have a weekly chart, breakup candle low, 448.55. You might want to write that down. Demark it on your chart if they're spiking through the gap. That is a destination where there would likely be a bull-bear battle. First time, best time. Write that down. Put it on a sticky note. If they're down there, I'm handing that to you on a silver platter. What about the financials? Anything going on over there? They were up a nickel today, so we'll call that flat. Eating time off the clock, well above all the moving averages. We're just going to say no material change from yesterday. Yesterday, they made a slight or nominal new high. Didn't close at a new high, but now they're beginning to eat time off the clock. No revelation. We're going to simply file it and move it along. Any material change with Smashmouth, the proxy for the Philadelphia Semiconductor Index? And the answer is no. They were down 50 cents today, about 1/4%. No big deal. We're not going to make a federal case out of that. It's basically the same story as it was last night. This chart doesn't look great. They're teetering. You had a lower high. And now the question is, will you get a higher low? There's a low, and you could get a higher low around the 200 period moving average, or if you're going to get a flush in the market, you're likely going to get a retest of the low and or lower. The semis are a pretty good proxy for the tech space. You got a lot of news out on NVIDIA. The rumor mill's out with antitrust this and all that nonsense. We'll just take it one day at a time on the charts. Have I told you how much I appreciate each and every one of you? Without you, these videos, well, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.